Good morning, it's Steve and Jamie from Signal Centre talking bull, and it's Friday the 1st of July. 1st of July, wow. It's
Look at
flying
that.
by. Yeah,
It really is, isn't it? I feel like blinking we were in May not long ago, in April, and here
yeah,
we are already July. We're getting
I
there.
know, I know. And Joe should be back next Monday. I'll be away from Tuesday, so we'll have one show together, and then I'll leave you in Jamie and Joe's capable hands, the J team.
The J team, I like it.
Um, let's dive in. Sorry we're late this morning. A couple of things going on. Let's dive into the latest headlines, and we can then jump into the technicals. Take a look at what's going on in the markets from a technical perspective. And yeah, any questions you want to ask, by all means, put into the chat, and we'll be happy to answer them. German labour market recorded a sharp increase in unemployment of 133,000 for June after a 4,000 decline the previous month, while the unemployment rate increased to 5.3% from 5%. These are the sort of things that we see when we are in markets like this, in this real high inflation market. Much weaker than expected data was significant in reinforcing reservations over the German and Eurozone economy. Source reports indicated that the ECB will use proceeds from maturing German, French, and Dutch bonds to buy bonds from Italy, Greece, Spain, and Portugal in order to cap yields and lessen the threat of fragmentation. Fragmentation, a thing that's going on, and yeah, not looking too happy or healthy in the Eurozone. The sources also indicated that the buying will start on July the 1st, so today. So we'll maybe see some reaction in the bond markets. PCE prices index increased 0.6% for May, with the annual rate unchanged at 6.3. Slightly weaker than expected inflation triggered some fresh optimism that peak inflation pressures might have been seen. I very much doubt it. So, but we will see. But you are joking. Chicago PMI index retreated to 56 for June from 60.3 previously, which was below consensus forecast of 58, and the weakest reading since August 2020. New orders dipped into contraction territory while inflation pressures eased, with the prices paid index at the lowest level since February 2021. Treasuries gained ground after the US PCE data, and with further gains after the Chicago PMI index, and the 10-year yield dipped to test the 3% level. There was further decline to 3 weeks lows near 2.95% on Friday this morning. Despite a rally after the US PCE data, Wall Street equities posted net losses on Thursday, and futures moved lower on Friday, with a net deterioration in risk appetite amid a lack of confidence in the global outlook. Overall, risk appetite remained under pressure today. The Swedish Riksbank increased interest rates by 50 basis points to 0.75% as expected, and raised its forecast rate profile with an increase to near 2% expected by year end. So all fun and games on the interest rate cycle, and let's dive in to charts and see what's going on. We'll take a little old look at Bitcoin because we've seen some quite volatile moves over the last 24 hours. We'll drill down to a daily chart. We can see another negative day posted yesterday, but a bullish hammer. So that's a nice reaction from the lows. It got down to 18,600 before reacting higher. We saw a big spike in the afternoon, just below 21,000, 20,900 we got up to. Now, looking at, well, that was actually overnight. That was at midnight last night, which was good for me because my gun to head trade idea finished on side
Nice.
at 9 o'clock. And then we see this big spike up and subsequent failure. So not really sure what the spike up was caused by. Maybe, Jamie, you can have a little bit of a hunt around while I drill down into the other markets. Let's take a look at gold. Gold has continued this negative flow lower, as we've been talking about and expecting. I'm really looking at this The next level of support coming in at 1788. That was the spike lower on the 16th of May. And then we've got other horizontal lines of support, 1781, 1754 after that. But yeah, reacted really nicely off this top of this downward trending channel. The 21-day moving average capped the gains and further downside after breaking the support at 1805. Like a knife through butter it was. So levels to watch now. As I say, we've got the sort of support coming in at 1788 and above. Really, the sort of downward trending resistance coming in around about the 1830 area. 1825 to 30 would be typical resistance. 1805 also, which was previous support. We broke down below it, and that should act as the initial resistance between 1800 and 1805. Trading at 1796 right now. Taking a look at oil, the oil market continues this correction lower. Look at the daily chart. Again, we're down below the Ichimoku cloud, so that's negative on a daily perspective. 21-day moving average is still pretty elevated, but you can see the move we've seen from the highs only a couple of days ago, 112.65, down to a low of 103. Next support comes in, well, I mean, we've got trend line support, potential trend line support coming in at 102.40, but 101, the figure for me, will be a break of there, close below there on a daily chart would be significant indeed, and maybe open up a retest of the 92 level. Right, so let's move on to indices. Actually, this is the Bloomberg story which came out. Jamie's just brought it up. Largest token briefly closed in on 21,000 before falling back. Bitcoin swings Buffett traders after token suffers worst month.
Yeah,
The large token rallied.
Yeah, not too much detail on why it happened. I think
No.
it's talking about the choppiness and just whipsawing people out of positions. But
I think this is the thing. We've got these sort of like these big levels that we're talking about, and so anyone who's interested in Bitcoin can come in and feels like they're getting in at a good level around about 20,000. Why not? Why shouldn't it be a good level? That's not what I think. That's what the market will be thinking, or the majority of traders, they'll be thinking we haven't seen levels like this. It was a previous all-time high if we go all the way back. So yeah, interesting level here. For me, it's going a lot lower. I don't want to tell you where I think it's going. So because it'll cause panic on the streets, I'll get death threats and everything. Anyway, let's look at the euro dollar. Bullish hammer posted yesterday on euro dollar. However, overnight price action has stalled a little bit. So there's a little bit of sign of recovery here on the euro dollar. The dollar index side of things saw the opposite, saw a shooting star candle. So that is a shooting star close to previous swing high. That's negative for dollar. So maybe we'll have a little bit of a dollar pullback. It's been awfully strong for a long while. This trend started in May 2021 and hasn't really looked back. Stalled a few times, but hasn't really sort of had any move and looks to continue higher. 21-day moving average coming in at 104.12. So that is predominantly euro dollar. 60% of that basket is euro dollar. Cable looking negative, although yesterday's price action was looked a bit better, but we've given up all those gains already. So a break down below our current low of 120.93 and further downward pressure that would look to target a move to 119.36. Dollar yen, obviously weaker dollar, that's had a bit of an impact. Bearish engulfing candle on that yesterday. A little bit of follow through this morning. 21-day moving average coming in here at 134. Where is it coming in? 134.56. Yeah, about 70 points lower. So look out for that. Support below there at 134.30. And below that, we've got trend line support coming in at 132.20 and 131.60. If we do break and close below the 134.30, then that will have posted a double top. Let me just get a couple of little arrows in there just to highlight highlight that potential for a double top. The neckline would be a break below 134.26. So look out for that on the dollar yen. That would give us a bit of indication of where things are going. And finally, Aussie dollar continues to push lower. It's broken support today. It's taken out the
Yeah.
low that we saw at 68.29, trading below there. Looks like to be in a little bit of free fall. Not good at all for that bad boy. Um, Diving into the indices now, we'll take a quick look. Nasdaq, this looks pretty negative overall. We've seen one, two. Well, I suppose the 29th of June was a bit of a doji. Can't really say it was negative, but it wasn't positive really. 4 days of negative price action this week, looking to round the week off with a really bearish looking candle. This is what the weekly candle looks like. We had a lovely bullish engulfing last week, and we've nearly given up all of those gains. So for the indices, further downside expected. 10,680, around about that level is the next level of support for the Nasdaq. Really needs to capture ground above 12,200 to sort of like stave off this negativity. The Dow, similar sort of price action, hasn't quite got down as far as the Nasdaq, but it has really made a dent on the previous week's bullish engulfing candle. Looks like it's targeting support just below the 30,000 level. S&Ps, similar sort of thing. We've got this head and shoulders formation, which is a little bit clearer than on other charts. Targeted move for that is a move to 3,487. If this maintains levels below the 4,000 level, it's further downside expected. Can't really look anywhere else other than that. And 12,450 is the key level to watch, or key support level to watch. It's not far away. It's about 300 points away on the DAX. We know that we were talking about this yesterday, that the average range in the DAX is about 300 points. So that's accessible even as early as today. 12,845 is the high of the day. So plenty of scope for a move down as well as that. Although it is trying to bounce off this initial support in front of 12,600, trading currently 12,784. And the FTSE 21-day moving average again, capping the gains, and the reaction lower, obvious again. Next real level of support coming in at 69.69, and below that 67.62. Needs to really get above the 73.50, 7400 level, and break back above this cloud to stave off the negativity. But I can't see it. Can't see it happening. I just think more negativity, more downside over the coming weeks while I'll be away on holiday. So I'll leave it all to you to sort out the mess, Jamie.
Yeah, we'll
Do you want to
figure
take
it
us
out. And I
through?
mean,
Yeah.
yeah, it's the same story on stocks really. We'll firstly jump into our biggest gainer and loser of the day. Here we go. Let's get it up here. Biggest loser of the day is TALS, which is Talaris Therapeutics. That doesn't bode well for me. Down 36.75%. On slight increased volume, nothing as crazy as we have seen on this stock. But having a look at this, this isn't right. This is the wrong. Let's try again. Have we got the right one, TALS? This is the wrong. Okay, we'll come back to it. Our biggest gainer, though, I think that's what was showing.
Yeah,
Was
that's rapid.
RPID, Rapid Microbiosystems, up 35.22%. A big spike in volume you can see there. Trading at over 7 million shares yesterday. Let's see, are we going to have this right now? Here we go. Rapid Microbiosystems receives $5 share takeover offer from Kennedy Lewis. Shares surge pre-bell. So a huge jump up in that yesterday. Let's have a quick look and see if we can find out what this is. Oh, that's good, we can. Talaris Therapeutics shares data on COVID-19 outcomes in FCR 001 treated kidney transplant patients. So I guess some data came out, looks like a phase 2 trial, and doesn't look like the market's reacted particularly well to those results. So that's our biggest gainer and loser of the day. We'll jump on into our heat map, and this is the heat map from yesterday's trading. A pretty bad day overall, especially for the bigger names. You can see the colors really standing out. Apple 1.8% down, Google 2.5%, Amazon 2.5%, Exxon Mobil down almost 3%, Tesla down almost 2%. So a pretty rough day. I mean, the standouts on the other side were Pfizer was actually up 3%, but not too much else. Some of these other electronic technology stocks as well were up a little bit, but nothing too positive there. Jumping into a couple of these names we wanted to look at. Start with Coinbase. I want to look at this because we're at that key support that we've talked about over the last few weeks. After we had that big sell-off where Bitcoin dropped from 30 to 20k in a day or two. Obviously, Coinbase felt that, and the level we really rallied from was around this $46 level we have here. It tagged that again back in the middle of June, and yesterday it hit it again, closing above it notably still. So we'll see. I'd expect perhaps a little bit of buying pressure to come in here before a further sell-off. I think that's my bias at this point. We've got this extended downtrend. To me, this is just a bit of a continuation, descending triangle. That's what it looks like to me, which suggests there could be a move lower if we were to get a break to the downside. We're jumping on Shopify. Shopify had its stock split, so we're now not trading it. I don't know what we were at. Was it like $500, $400? Or what was it? We can find this out. It was a 10-to-1 stock split, so yeah, about just over $300, right? But still, in this having some range bound action, you can see that's the resistance we've got here. Let me change it to red, and we've got this support down here. And again, at the moment, until I see some real signs of a turnaround, my bias is a break for the downside and continuation of this downtrend. It feels a bit overextended at the moment. We've had these 4 really bearish days this week, so I think for a good risk reward setup for me, I'd want some consolidation here where you could perhaps put your stop above that consolidation, trading a break lower. That's what I'd be looking for on Shopify. Airbnb I wanted to check in on. I remember when we looked at this stock when it was in this range bound action, we got that break and it looks like we've almost hit the target, which I believe is signified by this black arrow I must have left there when I'd previously looked at it. So
sorry, Jamie.
You're good. Have I gone?
No, you're there. You're there.
Still here? Yeah, so we're almost at this black arrow now, which signifies the measure move target. It's got there pretty quickly, honestly. Pretty extended sell-off in the start of May. We did have a bit of a flag type pattern actually before 2 really substantial gaps down, and this stock's really struggling to find any traction at all. The buyers just can't sustain a rally, and it's looking pretty rough. So I'd expect it to get to this. It's about an $81 level, so that's kind of where I'd next be looking for Airbnb. Nvidia, we looked at this support level day before yesterday now, and we've broken and closed through it. You can see the volumes increasing as well. I think we noted this was a bit of a continuation head and shoulders pattern, which is something that I feel like isn't such a commonly used version of head and shoulders, but to me, as I always say, it just shows that the buyers tried to regain control, failed, and the stock is still moving lower. So you can see there again, it's a bit of a descending triangle, you could say. I mean, it's a bit rough, but you get the psychology of it, is that the bears are still in control of this. And from a downside target now, we can, let's see, the 78.6 fibs down here. I think there'll be some buying pressure if we were to kind of get into this area of consolidation here. So anything really between about 140 and 120, I think there'll be at least an attempt to buy up there, as that has been a previous area of consolidation. Netflix, why have I got Netflix tagged? Not too sure, nothing too much to say here. Support's still at this 164 level. We are coming down towards that slowly. The last rally we had off the support couldn't get to that same level of resistance, so to me that says the sellers are coming into the market earlier and they are still the ones in control. So we will see how it interacts with this 164 level if we do get there, but until we do, it's a bit in the middle of nowhere for me. I've still got loads marks, I'm not sure why. Nike had this break through the 61.8 fib, a couple of doji candles. We'll see how that finishes the week. I think the close will be important here. If we do close down here, that's a pretty bearish looking weekly candle we have there. So we'll see how that closes today and check in on Monday. Novavax is posting a bit of a bullish flag here on the daily chart. If I kind of clean this up a bit, it might be a bit easier to see. Just these four candles here, it's quite a tight formation, which suggests that the volatility could be coming back into the market. The volume is down as well. So um, while the trend is bearish, you could argue this was a bullish flag, but um, I'm always a bit cautious. I much prefer to see a bullish flag in an uptrend. I think it just when you're in this extended downtrend, you feel the better risk reward setups are potentially to sell into rallies. So we'll see how that finishes. GME coming back to this support level. We'll check in on that next week. Moderna is still range bound as well. Costco, the buyers are really trying to push this up above this resistance. I mean, that was one of the only good stocks actually yesterday, and Pfizer's still trying to get back to this resistance. We still look to sell rallies on this at the moment. I think we'll just finish on Lloyd's. Lloyd's had this really nice. It's actually, when I looked at it, it was just this bullish hammer at support, and in the hour we've been trading this morning, it's actually been brought up quite nicely off that level. So a nice candlestick formation there. It's had some good follow through this morning, but we will see how that continues today. Still in this descending triangle type pattern. I'd expect resistance to come in at around 44.75, around this level here. But we'll leave the stocks there today. I'm with you though, Steve. I think there's just, for me, every rally is just like looking for opportunities to get short at the moment. There's not enough behind these moves upwards to really convince me it's anything substantial.
No, I completely agree. Further downside. Right now, this is the part of the show we come to. It's called the Gun to Head Challenge. It's where myself and Jamie pick a asset or stock or whatever we want to pick live on air and apply a trade idea to it using our strategy of risk management, which is placing the trade idea of at least a 2-to-1 risk reward strategy. All ideas are placed at market, so we have to enter. So that's the theme behind the Gun to Head. You're forced to make a trade idea. And the trades expire at either 9 p.m. or when the stop or target is hit. We'll show the performance. Joe's back Monday. He'll be able to summarize how we're doing at the moment. Performance-wise, we're not too bad. Better than you'd expect for someone who's forced to make a trade idea at an inopportune time. I mean, I don't know if you want to. I just want to highlight a couple of things. A couple of guys asking about gold again, and one of the trade ideas I was looking at was gold for this Gun to Head challenge, but I'll give you the reason why I'm not going to take this up. Obviously, on a weekly chart, this is negative. We're looking at some serious support down between the 1781 and 1788 level. So this band of support down here is quite key. We're approaching it pretty rapidly. We've had a really quick move down, so I expect to get some sort of reaction there. If we look at the daily chart, this is targeting this initial 1787, 88, and looks like we could hit that very shortly indeed. We're only about $6 away from it. So yeah, in a normal world, I'd be looking to sell when it got up to the top of this channel around the 21-day moving average, but it's extended quite aggressively lower, so there is potential for a bit of reaction off this 1781 to 1787. So that's why I'm not going to touch it from a intraday trade idea. So that leaves me with the only other option that I was really looking at, which is oil. Now on the daily chart, we've broken down below the Ichimoku cloud. We've had a little bit of a pullback higher in the last couple of hours. You can look at the hourly chart here, and we can see a nice little potential bottoming formation, but I still think we've got further downside in oil. So this is going to be my trade idea today, my Gun to Head trade idea. And we're going to look for further downside. Remember the levels we talked about, down around about the 100 level down here. The swing low that we got on the 22nd of June. We could go a bit further, a bit more aggressive. If we get through the 100 level, then that would be pretty significant. But on an intraday basis, that might be quite a difficult thing to achieve. Let's try and get a decent, at least a 2-to-1 risk reward we need out of this. So this isn't very straightforward. Selling it at 103.91. Normally, I like to sort of like give it at least a, I suppose that's not too bad, 2.5 to 1, and it expires at 9 o'clock. There we go. This is what the trade idea looks like. Ideally, I'd have my stop above this 105.18, but I think if I did that, well, or would I? Let me see. Yeah, that's just under 2 to 1. So maybe I can just extend the. There we go. 2 to 1 risk reward ratio. I have taken the stop above this spike higher, only just. So I'm selling it at 103.91. Target is 101.37. The stop is at 105.18. 127 tick stop against 254 tick profit. That's my trade idea for oil, which is already going offside. So let's get off this quite quickly.
Yeah, it's never nice when you see it start going the wrong direction straight away, but if you
No.
just forget about it, hopefully it will all be okay. All right, thanks, Steve. I'll jump in on mine. Actually struggling a bit today. There was nothing that I really liked the look of, but I'm gonna take a crack at selling the US dollar against the Swiss franc. Um, like I say, not a lot I love. The only thing I'm looking at here is we've had this resistance at, what was it, about 95.95, and I mean that's kind of good enough for me. We're in a downtrend as well, so the bias is setting into rallies, and this has been a pretty decent rally. So I'm hoping this resistance does a job again, and I'm going to target the previous lows. I can actually move this up a little bit, give it a bit more space, and still get a decent risk reward. So we're going to look to sell the US dollar against the Swiss franc at current prices of 95.94. There we go. Our take profit is going to be at 94.97, and our stop level is at 96.33. So that gives us 2.49 risk reward. Looking for a move lower on the US dollar against the Swiss franc today.
Nice one, mate.
Thank you.
Okay, so that is pretty much what we've got covered on the day's show. Hope you've enjoyed it. Just to finish off, we're going to show you what's expected today. 10 o'clock Eurozone consumer prices, 3 o'clock US is a manufacturing index, and we've got that on the key events for next week as well, which it's not, it's today. Next week, we've got a busy week. The RBA, Reserve Bank of Australia, policy decision on the 5th, US Federal Reserve minutes on the 6th, and next Friday, we've got US employment report and Canadian employment report. So plenty to get our teeth stuck into next week. My teeth will be getting stuck into some American burgers and chili. So
I'm very jealous.
I'll leave that all to Jamie and Joe. But trade safely today and have a good weekend, and we'll see you on Monday.
Thanks, everyone.